Bitcoin closing Sunday under the 200-week moving average. Is this the end of the world? Is it all over? Are we doomed? We're going to look into the history of the 200-week moving average. We're going to look at what that means for Bitcoin, what it could mean for the near future, the mid future, and the far future. We're locked in here today. You're here with us. Make sure you hit the like button, subscribe, tap the screen, follow along, say hello. If you're enjoying the content, let me know. Welcome back, baby. The 200-week. After testing it as support for the last 3 weeks, including the sell-off at the start of the month, the 200-week has finally been lost. This is by no means a bullish close for the week, unfortunately, but it also is not the end of the world. We have seen Bitcoin close many weekly candles below the 200-week, and we've always gone on to make new all-time highs. It didn't ruin the tour. Everything was just fine. What's up, Ben Brown, Glag? How you doing? Pickle, Paul, Krishna, Angel, how y'all doing? Didn't ruin the world tour. It was not a great sign, and it didn't typically result in quick reversal price action back to all-time highs, but it was not the end of the world. So last time this happened, I'd say most notably, in fact, trading below the 200-week, was the previous bear market. It's interesting that we also lost the 200-week in June of 2022. We lost it in June of 2026, exactly 4 years later. We lost the 200-week, and we spent, I would say, about 2 months trading sideways, moving back, retaking it only to lose it again in August. That could definitely be the price action that is on the table for the next few weeks. However, you can see that it did not mark the bottom, unfortunately. The bottom was close. I think there was only about 12% from the low after the 200 was lost after that, but it did not mark the bottom, and it actually did suggest that we had quite a bit of time before the bear market would resolve or the total bottom would be in. It was about 160 days, which brings us roughly to October and November of this year. Probably the target date everyone's looking at this point for the bear market bottom to be in. But we did lose the 200-week moving average, and it wasn't the end of the world. This was honestly the longest we have ever spent under the 200-week. The example we can find previous to this, we see some wicks below it, and we see some very brief trading, but the last bear market really defined this level as a solid buy or even at least DCA start signal. But it did not define it as the exact bottom. It gave us a tip off of, well, the low is coming, prices may get lower, but the worst is behind us. Let's put it that way. People ask like all the time, why would the 200-week moving average? Why does that matter? You know, what about the 300-week? What about the 100-week? What about whatever? And there's some credit kind of in either direction of this. It is in some ways just an arbitrary thing that we use. You can look at any moving average and find value in it, but the 200-week actually has a little bit more of a special significance outside of we basically just accept this as valuable. Traditional trading and traditional technical analysis shows us the 50 and the 200 moving averages are favored to define golden and death crosses. But on Bitcoin, the 200-week actually has a little bit more, a little bit extra significance. And that can be found, you probably will never hear this anywhere else unless they heard it from me. But this has the extra significance of 200 weeks, if you think about it, is what? It's about 4 years. It's 4 years minus 8 weeks, right? So it is pretty much a 4-year moving average. Bitcoin is often defined and described in a 4-year cycle, having its highs and its lows, matching up, etc. And the 200-week is the expression of a 4-year cycle in its average price. So I think that gives it a little bit more significance than the simple, well, it's the 200 and we use that as traders, which is also fair. There is validity, and I would say it's an intelligent study to look at other moving averages as well, 300, 100, 400. We'll look at those, but we're going to get through the 200 first, the history of it, what it means here that we've closed below, and like what we can expect. A lot of you are just tuning in again for the day. Welcome, we're live early. I look like Justin Timberlake. Thank you, CRX. I appreciate that, man. I won't let this ruin the tour. I don't have any DUIs, so that's good. I'm going to ask again here. I know people are just waking up, getting in here. Tap the like button. Tap the screen. Subscribe. follow, say hello. Help the engagement here, especially over on TikTok. Nobody has said hello yet. I'm gonna wave at everybody. Here you are. Have these waves. I don't know what they do. They probably don't do anything. I want to know if you guys think that the bottom is in for this month. We only have today and tomorrow in June. So it's 58K the low of June. That's the question today, and I want to hear it. What's up, boys? What's up, Elliot, Maggie? Crowned by Grace. Good name. Pet Rock, Anton. So we've looked a little bit at the 2022 bear market bottom. It was the longest time we've ever spent under the 200-week moving average. It was a scary time. But we can see that after we had lost it, the low was in, and we basically regained it once retook it, we'll say, the 200-week, once the bull market was back. That didn't happen until March of 23, but again, that will be a valuable signal. I would say later in the year or even into 2027 that the bull market is back, the retaking of the 200-week. So definitely don't lose sight of this over the next few months. Let's go back a little more though. The 200-week has played a role in pretty much every cycle, which is really cool. I think it makes sense. The 4-year moving average should have some impact on a 4-year cycle. Go back to the previous bear market before that, 2018 into 2020. We actually saw two beautiful touches, and this is where the 200 really got its historical precedence and its value of like, that's the buy signal. That's what people were saying going into 2022's bear market. Because we had lost 20,000. We spent almost an entire year trading sideways, testing 6,000 before breaking down again in November. You'll find it like the farther you go back, the more October and November have significance for bear market lows. We broke down from 6K to 3K, and support was found directly on the 200-week moving average. This was a lot cleaner price action. We saw these tests really support price more, obviously, than the last bear market, and even more than the current bear market we're in. We had two tests of the 200. This gave us a higher low, and we moved into 2019's rally that was honestly beautiful. This is when we started streaming. It was like June 1st, so we were like back here. It's when we started this channel 7 years ago. But we did not leave it behind that quickly. Even in the COVID crash of 2020, price traded significantly below the 200-week moving average. But you can see that the weekly candles really favored settling up or closing above them. On the COVID crash, we had 5.3 thousand. It depends on what exchange you're on. But roughly, those candles really quickly retook the 200-week, no matter how you look at it. And basically, they closed above it for almost every purpose. We did not revisit it until June of 2022, the example we just looked at. So in the last two bull markets, we have seen maybe I think a weakening of the 200-week. I'm gonna like the word weak is gonna lose all meaning here in a minute. I keep saying it. A weakening of it as support in bear markets, because we had totally lost it in 22, and in 18 we had found support on it twice, and it proved to be an excellent buying level. In both of these examples, they were close to the bottom, even if it did trade lower after testing the 200-week. There is actually one more time that the 200-week was tested, and I never hear anyone talk about this, and I will admit, in the 7 years that we have been live streaming Bitcoin trading, I actually wasn't aware, because I constantly was looking at Coinbase's chart, that there was another test. Or at least, I wasn't aware that the test was so clean. We'll put it that way. I know that I tested it. I didn't know it was this clean. So go back to, the bear market before. So we have 3 in a row. Technically 4 in a row if you count the current one as a test. 3 bear markets in a row. Back to March of 2015. Bitcoin was at $196. Man, I wish I would have gotten in a little bit more. I wish I could have bought that price. Ooh, nice. Let me say hello to all these TikTok peoples. Hello. Lots of people over there. Keep the hype coming. Keep the energy coming. In 2015, price traded from about 1,200 down to 150, and price came to this exact level. Came to the 200-week again. Once again, testing it as support twice. The second test, actually, we had closes below. So this is another example of closing below the 200-week moving average and it not being at the end of the world. We tested it twice, held as support, and price rallied again. So basically, Every time the 200 week has been tested, it has been in a bear market. It has been close to the bottom. It hasn't been the exact bottom except for in 2018. It was the exact bottom in 2018. It traded maybe $100 lower, like a 1% lower, kind of a margin of error. But it was a signal that the bottom was coming, that the worst of the bear market was behind us, and that oftentimes it signaled sideways price action was coming. And we saw that in 22. We saw sideways in 2018. And then again, we saw sideways in 2015. The 200-week moving average is probably what everyone's looking at this point. I think there's a reason for that. I think it's an important thing to keep track of. But what we need to keep in mind is that it is not the end of the world that we've closed below it. Certainly, it would have been better if we didn't. And I would have taken that outcome. But it isn't the end all. It isn't doom. And in fact, if you look at it in a bigger picture, it's probably closer to like a good thing, right? It's like, it's always signaled that the worst is behind us. Doesn't mean that we can't spend the majority of the rest of this year dicking around at this price. I think that is like the most logical outcome here. We didn't see the bottom of the last bear market until it was like mid-November. That was 161 days. We didn't even really see upside price action until the next year. This is a great blueprint to kind of look forward and expect going into 2027. Well, I don't think price action will look exactly like this. It probably won't really look like it at all, but it will likely rhyme with it. We'll likely see sideways price action over the summer, as Bitcoin has done almost every year I've ever watched it. With a low coming in at Q4 around October and November, probably in November. Some sideways price action, and then into 2027, that Q1 kickoff, which we've pretty reliably seen every 4 years. Until we see some change to this pattern, I don't see a reason to look for something else. I remain hopeful. I'm always bullish on Bitcoin long term. I think its future is up and to the right, but it often trades sideways and down in between. That being said, I don't think there's a reason to be looking really for significant upside at the moment. That can change, and we can talk about that in validation after we're done kind of getting through this bigger time frame. But there's nothing there yet. There's just hopium, and I love hopium as much as the next guy, but hopium don't pay the bills. So I said earlier, why not the 300? Why not the 400 moving average? Well, we can look at those, and there's likely going to be something of relevance here. Mind you, those do stray from 4 years, right? The 300 week moving average is actually 6 years. The 400 would be 8 years. Maybe the 400 would be more valuable because it's like 2 cycles, right? I don't know. I'm going to add the 300 down onto the chart, and you'll find that it also has had a pretty decent history with bear market bottoms. The last bear market in 2022, we saw the final move bring us below 300 week. We'd actually never traded below it, I don't think, before that. The final move, the 20K down to, oh no, it's all over 15K, closed below the 300, found resistance there in December, and was broken through early in 2023. This is the interesting part. We traded underneath it for a little bit. To my knowledge, I don't think we ever closed below it before. Nope. That 300 week sits at 54K right now. All these big moving averages are so much closer to price than they usually are because Bitcoin really did not get the upside move, the expansive upside bull market move that it's seen in all the other cycles. That's put us much closer to the average price of almost any time frame of any amount of volume, it doesn't matter VWAP, than we usually are at this point in the cycle, which is something to keep in mind, but not necessarily something to, I don't know, bet on an outlier about. It would be very unusual. I would say the probability of Bitcoin not trading below the 300 week in this bear market is very low, single digit low. It's all but going to happen, right? Whether it's sooner or later, 55K is really not far from current price. Current price is already at, let's see, where are we at right now? 59.2. like 10%. This is not a crazy thing to happen. But this 300 week also played in the previous two bear markets as well. The COVID crash, it didn't actually test it, but it came so close, we'll just count it. The wick low at 3,800 right there to the 300 week moving average. Even in 2015, technically it didn't exist yet. Actually, that's pretty cool to point out, chart nerd stuff. The wick low in August of 2015, the final low in that bear market, was pretty much the 300th week of Bitcoin's traded price action. And you can visually see that because the 300 week moving average begins one candle later. So that was the 300th week of trading. Just a little nerd fact, a little chart fact for you. Other than that, yeah, there's not that much to garner from it. We're likely going to trade under it like we saw in the last bull market. You'll notice a pattern though, as we go back, these longer moving averages kind of get farther away from those bear market bottoms. Even in the last bear market, we saw the 300 only traded below for a little bit, and that was the final move to the downside. So the logical next thing to ask, I know, is, well, what about the 400, right? Well, we can look at the 400. There's no reason we can't look at the 400. Let's make it a different color just so our brains can easily process it. I haven't really looked at it that much, but why not look at it? We've never tested it. There's an argument here for you to say, well, Tom, I see an obvious pattern here. We had the 300 moving average pop out of into existence in 2015. It wasn't tested really until 2022. We'll say it was just barely tested in 2020. And as we've gone on in time, we've seen these lower averages tested. So what about the 400? Well, the 400 is right here, and I'd say the logical thing would be for this bear market to test the 400. It did not happen in the last one. It's never happened before. It has never been seen as price action goes. And what value is that? 43K. 43K is not that scary of a downside target, at least for me. It might be for you. But for me, 43K is probably a great place to start deploying capital if you're, depending on your cost average on Bitcoin. If we see that low, certainly I think that is value buying. From the high, what would that be retracement wise? Right there. 43,000, 65%. It's a really, really clean percent down from the high. Really clean. It is a diminishing bull market high to bear market low versus the last cycle, which is something we've seen every cycle. That was about 75%. 65% will bring us right about to the 400 week moving average. If we throw them all up on the chart again, let's do this. Can I really sneakily just change this back? There we go. There we go. Boom. If you throw them all up here, I hate this color. I hate the colors that I added on this. I hate it. Let's do. I'm gonna turn this back blue. 𝐂𝐴_𝐳, by the way, making this music. We can see that they've offered varying levels of support. Each bear market seems to bring us down lower into these moving averages, and the next logical step, I guess, would be to test the 400. The 400 represents a moving average of 8 years, 2 full cycles. It's something that Bitcoin's never seen, but in my opinion, it's really not that scary, not that terrible of an outcome. All right. How long was that?